Good morning, traders. It is Wednesday, the 26th of April, 8:02 a.m. Chicago time, 9:02 Eastern, U.S. time. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market stance this morning is sideways. Uh, the market's in a holding pattern. The S&P is unched this morning. The Nasdaq's up 3.25 points. And the U.S. Treasury notes are unchanged. The Treasury bond is unchanged. The leader today is the U.S. dollar, up 0.34%. The laggard today is crude oil, down 57 cents or 1.15%, trading at 48.99 this morning. As I said yesterday in yesterday's Trader Bite, I'm expecting crude oil to push in a lower low as the move down seems looked incomplete to me. Gold is also unchanged. The news overnight is pretty light. There's talk of the new Trump tax plan, which would cut corporate rates down to 15%. Currently, corporate tax rates in the U.S. are at 35%. There will also be infrastructure spending and tax credit for childcare, and we'll see how that moves along politically. Um, as far as global news, earnings. There was a lot that came out yesterday. Boeing reported pre-market here, and yesterday we got AT&T, United States Steel, which lost actually. It reported down 83 cents. It lost 83 cents. Was expected to make 30 cents. Huge swing there. The stock's getting pummeled this morning, but there are a lot of earnings on deck, and you need to pay attention to those. Um, as far as other news, U.S. Treasury Secretary Mnuchin this morning says tax reform is a major priority. Details to be released later today. So the market will be looking for that. Again, confirms tax rate to be 15% under the plan for small business. So it went from a corporate rate of 15% to small business 15%. And the border adjustment tax bill is no longer being supported by the White House. So just a lot going on there. As far as what we're expecting today, remember today was fairly dead when it came to scheduled releases. The only thing we have today is crude oil inventories. They're expected at 10:30 Eastern. The consensus expectation for this last week is a draw of 1.948 million on crude oil, a draw of 1.25 on distillates, and a surplus of 750,000 barrels on gasoline. Let's take a look at what we expected yesterday. Here we go. Primary expectation yesterday, both of my primary hypos were responsive. In other words, we were gapping up at the time of the trader buy, as you see here. We were trading at 23.7850. Both plans were looking for responsive selling and a close of the gap. Neither one worked, so that was a total miss there by me. Expected the market to move back into balance. To rebalance after the prior day's gap zone. Did not expect two gap zone days to hold. For those of you who get flex levels, you notice there are two gaps now in your charts. Since I updated the server, I added the second gap from yesterday this morning. So yesterday was looking for a test above the overnight high to finish the move up on the overnight, and then was looking for responsive selling back into Monday's range, and was looking for the market to balance out at 23.71 and then bounce back up into the gap zone. That was the primary hypothesis. The secondary hypothesis was for the market to not get any push up at all, to become responsive, bounce around, have a retracement, give us an opportunity to get short into the range, look for 23.71, and then likely to push all the way down to value low around 23.68. which was the overnight low, and then to hold steady inside of Monday's range. That didn't happen either, so neither plan happened there. Here's what it looked like. We opened at 2378.50, and it pushed up immediately to 2379, just two ticks, dropped to 2377.50, just four ticks, and then we had a driver here, a driver come in and push immediately to 2384. You could see the driver trigger right there on the delta. You could see the large delta buyer, and so that really put an end to the discussion about this gap zone getting filled, and the market held the mid throughout the day, held VWAP in the mid throughout the day. I put an image up yesterday. I invite you to look through my Twitter feed at twitter.com/futurestrader71 to look at a heat map for a trade set up against size on this retest for new highs. That was the only opportunity I saw for the day. It was very, very quiet trade yesterday. You could see yesterday that the large lots in the delta were leading throughout the day with 42 lots or more pushing right from the start, and smaller size trading both ways, whereas the larger lots are steadily holding higher, steadily participating in the market there. It just had very little chance of rotating back down. Since then, oops. Since then, what we've done overnight is virtually nothing. We have completely bounced overnight, completely Gaussian profile. The point of control overnight is right on top of yesterday's point of control. The current point of control is 23.85 for the overnight session, is 23.85 and a quarter. Yesterday, the point of control was built on yesterday's close. The overall overnight inventory is balanced right off the get-go. I expect that the open will be very quiet. Again, I'm looking for responsive selling at some point. We did not auction both ways yet, and so I'm looking for an opportunity for the market to test what's below. I know there's a lot of good news out there, especially with this tax plan and some really strong earnings, but still the markets are not trading both ways. Okay, so let's bring this back. So you could see right here, there's a gap, a very large gap zone from the French election, and then we have another gap zone left behind from yesterday. Let's turn those flex levels off. Okay, today trading right on top of yesterday's point of control, open auction. I'm looking for an attempt higher, and then I'm looking for responsive selling down into the low of yesterday. If we do push through, I'm looking for the gap mid test, which is 23.75, 23.75, 75. That's the gap mid as the extended target. So if the market finds its sellers, it is likely to push down to this price here. That's hypo 1. I'm still looking for responsive, and the reason I'm looking for responsive is because we have these gaps below us. The market has moved up on gaps. So you notice the gaps happen and then it just goes completely sideways. Yesterday we had a nice drive early on, but pretty much sideways. So there isn't, the buyers aren't really vigorous enough to keep the buying going, because and what that's telling me auction wise, because that's all I care about, it's the auction. What that's telling me is the market is potentially reaching a price where a value is being perceived, potentially also overshooting that value. And the only way we'll know what value is if we rotate in the opposite direction and test the other side and see if there's any interest in these gap zones. That's what I'm looking for the market to do. And that's the basis with which I'm going with hypo 1 as the selling hypo. Hypo 2, open auction, and then the market just drops and starts making its move to the gap zone early. I'm looking for a bounce in the gap mid and then a return back into yesterday's range and holding steady again to balance for a second day. We would get 2 days of balance, and then that gives us the energy to make a move from there for whatever happens next. So if it does do this test and moves back into the range, now you've got plenty of room and a clear rejection of lower prices. Now the market's more free to move towards 93.50 and to make that test. It's very hard given the conditions that we're in now. Um, it's very hard to be able to tell which side is likely to be pushed today. But just remember, there's a strong bull trend here, and the path of least resistance is going to be to the upside. However, I am looking for opportunities for it to rotate back down. Again, as I said, gap, and continue are not very common. They've been happening more so in the last year or so because of the election and various other things. But overall, the market will want to will likely test lower before it has the confidence to continue to move higher, in my opinion. Again, earnings are very strong, so that's helping support that thesis. Okay. Um, Hypos 3 and 4 just basically test lower and then continue higher from within yesterday's range. But anyway, I'll let you guys come up with your own hypos. And again, I asked you to have a look at my Twitter feed and look for the heat map I posted yesterday from my execution platform, the S5 Bookmap, to show what I'm talking about when I say I form bias and then I look for areas to lean on in the order flow to actually initiate the trade. I think that's useful information to you. It's also covered on webinar 5 on my website, futurestrader71.com. I hope you find this useful. Good luck today. Just keep your risk in check and just get ready for the markets. We have 15 minutes to the open. Good luck.